All right, greetings. Again, happy Friendsgiving, Thanksgiving. My name is Samantha LaDuc, and I appreciate it, Anka and David, for this invite to share a little bit of, I guess, my perspective of some unique look at parabolas and specifically how to anticipate them, how to trade them. And hopefully, once I'm done, you'll start to see them everywhere. Just to back up a little bit, again, my name is Samantha LaDuc. I'm the founder of LaDucTrading.com, CIO of LaDuc Capital LLC. And I am not only the founder of this website, LaDucTrading.com, but I also run a live trading room, which includes live market analysis from macro to micro every morning. I have a Discord product, which is very much geared, a Leduc Trading Discord, very much geared toward momentum and more kind of young, community driven, you know, traders who are very much interested in this excitement of chasing parabolas. I am much more of a background of macro that then helps me identify sector rotation, and then a lot of technical analysis to identify when trends are starting and how to stick with them and when to protect profits. So I'm a little bit bigger picture. But I also have launched not only the Discord product of late, but risk indicators that help time it through algos. So I'm very active in the market. So I'm not only literally sitting in front of a screen, basically commentating and doing custom analysis for clients and posting all of my analysis into a Slack client workspace, but I also have algos and a Discord channel and an institutional offering. So long story short, I'm very much focused on identifying macro to micro trading opportunities across multiple time frames, and parabolas are part of them. This is a little bit of background of if anyone has, kind of interest in doing this look at why something is moving. I'm definitely, I'm your girl. Like, I want to find out not just what's moving and where the technical low risk entries and profit targets and stop losses are located, but I really want to know why something is moving. It's a really big deal to me. And then helping clients, capture that trade and how best to trade it, because everyone has a different approach. Some have a very short duration in mind, which I would say is definitely more of the community in my Discord offering, for example. Then I have an institutional offering that is very much bigger picture, right? And then, big ideas, trend trading. So everyone is very, very, it's a personal journey of where they identify risk. If they trade stock, options, futures, crypto, commodities, currency, I don't care. So I'm across all asset classes. And such, it's nice that I've been invited on some national media to present my perspective, especially when we have turns in the market, whether it be treasuries or oil or I don't care what. So that's my thing. I love to analyze, educate, share my passion for trading, my nose for news. Obviously, I'm sitting in front of a live trading room, so that's what I'm also spying. And then this macro to micro analysis for active traders and investors. I'm going to showcase some of what I have seen and what I see going forward, especially as it relates to parabolas, because let's admit it, we all like to either spot these parabolas forming to get in and ride that wave, or we like to make fun of the outsized euphoric moves in some of these parabolas. But at the core, I think we really are very much parabola traders, one way or the other. So that's my space, is discretionary trading, volatility, and using that macro to micro backdrop. Everyone wants to be a parabola trader. That's basically, I really think, we really do, whether it's those who are interested in Bitcoin because they think it's going to, increase exponentially with the networking effect. Whether you're in that camp, fine, but you're trying to catch that next wave, right? Or you're simply amazed at the wonky action in a GameStop, and whether or not the Reddit traders are really manipulating that action, etc. So there's just tons written about parabolic trading vehicles, and the trading environment that we have is perfect for it. Oh my God, it's just stunningly euphoric in its nature. So we have a little bit of everything for the macro trader and the micro trader. So on a macro lens, okay, pull back, I have been an inflationista since last summer, big time. So I had a theme last summer, which was we were done going down in our rates. So basically the 10-year yield, I believed, was going to move higher. It was going to drive commodities higher. We were going to be a transitioning phase of not just the Pfizer vaccine and the Biden blue wave, but this transitioning into things over paper. So value was basically picking up speed. Growth was also moving, but value was coming up off the floor. So that meant things over paper is this commodity creep. Nat gas started to spike recently, especially in the UK, but we've had coal at 2009 highs. You know what's happened to oil. We went from negative to very, very positive. I'm not talking about what's happening right now in the fade in oil, which is also a tactical trade that I positioned clients for based on political intervention, right? Biden wanting to tap down the price of oil. But oil is still bid underneath the surface as an inflation hedge, and also as a supply, constraint in trying to get supplies into even the drilling industry to drill more. So the point is there's another storm of things that are in parabolic moves, and some more than others. Uranium has been a fabulous move. Food, shipping, especially container rates. Think inflation. Now, we had a really big narration around this in lumber earlier in the early part of the year. It was interesting. It kind of timed with the GameStop and the AMC and all those meme stonks. But the point is, you have seen them and you're kind of like, when do I get in? When do I get in? Or do I avoid this altogether? Because most people know parabolas retreat, and they oftentimes go back to where they started. And sometimes they even break those lows. So knowing when to get out, which is why I kind of use that expression, parabolas are trapped longs. That's the title of this presentation, but it's also really important concept. So parabolas are trapped longs, and when you start to see volatility in that parabola is when you start to see liquidation risk. So right now we have continued inflation, no question. The prints have been 5 months in a row. Hold on one second, let me just grab something. Oh, that's not what I wanted. There we go. I want my Slack channel so I can get at something I want to show you. Come on, slideshow. Thank you very much. All right, so we have had very strong CPI, and it's not parabolic per se, but it is absolutely pushing into a huge beat. In other words, it's very, very hot. Let me just show you what I mean by this. So we have basically this was before CPI was announced last week. And why CPI matters, this is our inflation rate, is because obviously a lot of commodities and food and such is tied to it. But it's a measurement also of this increase that we've had year over year in housing prices. And where housing prices go, rents follow. So we've had a lot of demand pulled forward in housing inflation. And that has caused a lot of the CPI to increase. So you can see where we've started to increase this year just in CPI, right? And now we've had 5 months where it was in the fives. I keep saying inflation equals sticky. And then this October print came out and it was 6.2. All right. So this is very important for commodity returns. And it has created some of this parabolic activity, for example. Hopefully you can see this. Hold on one second. Yeah, you can see this. I didn't pop this in time, but you'll see it anyway. All right, so that's a look at commodities. It's a Fed measure, inflation gauge. But the point is, you can see over the decades, right? This was the 2009 deflation, V-shaped, and now we have this parabola, for lack of a better term. But this is rising inflation. So you have a lot of other products that are rising with it. And that's kind of the point of talking about these metrics of parabolas, because whether you're a commodity trader or not, you want to know for trading purposes what's moving higher. And right now, a lot of products that are tied to inflation have moved very strongly higher, and they are still hot. So despite what the Fed may say, it's going to calm, some future quarter, the point of the matter is they have not peaked. They have not turned and fallen. Some have, which is very interesting. If you are in the UK, you can see a parabola. That's UK natural gas. Look at that puppy. I mean, that is intense. All right, some of this was political, Putin coming out and saying we're gonna help. Then maybe not so much. The point is, a lot of parabolas will absolutely peak and then crash, and you are a trapped long if you're way up here. So this is exactly what I mean. And across tons of individual stocks or commodities or markets, you can see this play out time and time again. So kind of the goal is to identify, all right, when is this going to turn? I want to show you some kind of mechanisms to do that. And then how far is it going? This has not returned all the way down to its base, but lumber did for the most part. So the timing of this whole cycle in commodities, to me anyway, is representative of the money that can be made off of these shrieking hot inflation prints, and then being aware to take care when they get too extended so you can protect profits and or short on the downside. So we did that with lumber. This right now container rates look to be turning, but they're still incredibly sticky. Food is also, forgive the pun, sticky. Uranium is staying bid. Oil right now is in a fade, but we'll see if that, I have a thesis that will fade and then pick up steam later. Anyway, the point is we definitely are short everything. So we don't have enough homes, cars, meat, inventory, workers, but we have too much money. So it's chasing too few goods, and that's going to create an absolute euphoric type of chase and a parabolic environment for chasing. So you're going to start hopefully to see everything and to measure if it's in fact a parabola or not. So this is really a little bit of what I want you to kind of spy when you have this. I kind of want to like 45-degree angle. That's really, really healthy. This is where it starts to extend and obviously gets extremely extended from the mean. It's most likely going to come back to the mean. So that's kind of something to keep in mind. All right, so here's an example. Trends, however, matter, and not all parabolas, with momentum are sustainable. So here's an example, right? Not all momentum is created equal or sustainable. You've got COVID spikes, and I use this very, very timely chart by Jim Bianca, where you can see United States and Western Europe. We actually have a little lag to them. They spike first, then we follow. But the point is, we have these parabolas, and then they come back down. They might retest, and they come down even further. Then there's a lower high. They fall even more. Now we're picking up speed again. Now we actually have a higher low, and now we're taking off again. This is, again, Western Europe, and we typically follow. So we are in a parabola in Europe now with spiking COVID. We could follow here in the States. So some things, however, so this is a parabola that comes back, okay? And I want to show you that kind of like in charting terms, that this is a lower high, lower high. Oh, wait a minute. We just came back here. Now we're taking it out. So we now have a higher low. This is an example where trends really matter. This is a parabola from the 2000 right up into the 2013, 14, right before Uber and Lyft entered the market, well financed. Basically, they didn't just steal the New York taxi medallions, they just made them obsolete. So this is not a parabola that's likely to come back, right? This is a completely new paradigm of technology coming in and reworking an entire market. So COVID, it's coming back, right? We got little bursts here and there, and then it ebbs and flows and all of that. But this, not likely coming back. So the medallion business was also a parabola until this double top, and then you can see it came not only all the way back down, to ground zero, down to the floor, it took it out. So it's really ground zero. This is really the example of a trend that matters, right? Versus one that's going to reemerge because we have a reason for it to. Then there's this time frame kind of congruence, and you can tell a lot, first and foremost, about a parabola. You already know it goes up and then it comes back down. Sometimes it does not come all the way back down. But the point is, this is a high probability short. Once you identify a top, you can have a thesis that can actually build on itself, and you can just watch the price action go into a protracted downtrend. Those are not really perfect examples because they're obviously events, not necessarily an underlying asset, but they look a little bit like this very early chart of Bitcoin. And I want to kind of show you this because it is a good example where you have a little base, right? And then it takes off. Then you have a little base again, then it takes off, and a little base again, and the next one starts to get very excited. And this is where no longer do you have like this 45-degree angle going on. You have this curve, which is parabolic curve, that will at some point exhaust itself in some capitulation buying and then calm itself down. In the case of Bitcoin, just as an example, I'm not talking up Bitcoin, I'm talking about its chart structure. It looks very, hold on one second, let me just get something. It has a fabulous little record of lots of little parabolas. Hold on. All right, so for example, Bitcoin returns. I know this is a little, foggy, but what the heck, you'll get the idea, okay? So you can already see the chart, hopefully in your mind, where since this was a penny stock, right? Huge rate of change in 1 year, huge. You can see these parabolas, and then they crash, and then they form again. They take a little while, then they explode again, and then they completely crash. And then the point is that parabolas can be waves of parabolas, like that COVID chart that I showed you, right? Same thing with Bitcoin. This is a wave of parabolas. So if you have, again, an argument to stay, hold on for dear life, that's fine. My point is just to show that you can have sustainable trends like a COVID trend. We got to learn to live with it, or a Bitcoin return chart where we need to learn how to trade it or hold on to it, where you will have rolling parabolas. That's kind of basically, we're in one. So we're definitely in one. All right, so this 68,000 price, granted we dropped 10% yesterday, down to $60,000. But now they are still looking at fascinating fractals of prior parabolas and trying to, for example, this is a chart of Ethereum. Okay, also Jim Bianca, he does great work, by the way. Take a look at Ethereum, and this is basically a fractal to Bitcoin. And all I'm trying to express here is how parabolas really have a sustainable rolling trend in certain assets or in certain events. So here's one from 2012, and then it took a whole year of digestion. Here's another one, 2013, and it took a few years and some very big pullbacks, but nothing broke. Same thing, we had a solid move higher in 2017, 18, you know about that. Then we went sideways, flat, back down. It took a while before this actually figured out, it was not going to go back to zero. So the case is right now, again, we're in a parabola for Ethereum, for example, that even though we're printing around, 4,500, this fractal points to about 20,000. So that's a parabola. Whether it comes true or not, that's not really my point. The point is, I've seen this happen time and time again where everyone is so excited about this, they jump on, and the last in are then the first out. And if you notice this 20,000 mark, for example, from $4,500 to $20,000, it then goes sideways for about 2 years. That's pretty painful. So that's what happens in parabolas. They do trap longs. And if you have a perspective of pulling out in time, because time frames matter, I think that'll help a little bit. That's basically the emphasis I'm trying to give, not particularly that Ethereum is hot fire flames or Bitcoin is about ready to reach 100,000, 200,000 by year end. My point is that this FOMO action typically results from trapped longs, and then volatility enters and it becomes a liquidation event. So your ability to time this is going to be key. Otherwise, you're going to hold on for a few years before it goes into the next phase, if this fractal is correct, if this rolling parabolic trend is correct. Does that make sense? All right, so time frames matter, and deciding how long you really want to stay in that trade matters. So, for example, if you don't want to stay in that trade and I don't want to mix metaphors here, but I do want to show. Oops, sorry. Car. I mean, oh my, right? This is on a day time frame. You know what happened with this puppy, right? So this was just a kind of a freak of nature. It was rolling. Let me just see if I can put this on a... No, I really can't. I'm going to just do this. Hold on. All right, doesn't matter. So the day before, this was printing about 170 bucks, all right? So a lot of chasers came into this, whether it be Wall Street Bets, Reddit, however you want to put it, shorts covering, I don't care. The point is, when this action happens and you have this parabola, highest probability is that at some point it will break. One way that I helped, I don't know, any really diehard cowgirls and cowboys who want to trade this kind of one-day wonder, but put it on a much tighter time frame. So in this particular case, what I suggested, seriously, because we were amazed looking at this take place, my suggestion was put on a 5-minute and then trade the levels. So this topped out and the prior bar, you can see this, I said if it breaks, it's a short to the next level. Here's the next 5-minute bar. Put a bar. If it breaks, it's a short to the next level. Does that make sense? So some people put it on 1 minute. Heck, even some have it on a tick bar. For me, I'm not that girl. I like weekly, daily, and hour time frames. The tortoise and the hare come to mind. Well, this to me is the tortoise and the hare. Let me just show you. The hare is all cocky and confident. I'm going to win this race. You have no idea how fast I am. You can't catch me. Next thing you know, taking a little nap, has lots of sweet dreams, diamond hands and first place and all this stuff. And then ultimately, the hare wins the race. So this is a meme stock in 3 pictures in a children's story. Those who actually thought they could time this liquidity event, right, ended up getting really hurt. Many did. Very few actually can do this extremely well because it's not just timing entries and exits, it's also having the stomach for it, right? The speed at which this stuff moves is lightning fast. You cannot go to the bathroom. Nope, you can't. You can't get coffee, can't take a phone call, you're done. So the point is, this is a parabola on a very, very tight time frame that you have to watch very closely. In the same way, if you're trading Ethereum and you're now playing a parabolic rise, how are you going to time that top? Know yourself. I'm not saying stay away. I'm saying know what you're doing, know what you're trading, know your time frame, etc. So that's all. I thought that would be kind of helpful to explain. We are in a fabulous parabolic trading environment. It's not made for everybody. I personally am more of the hare. Strike that. I'm more of the tortoise than the hare, but everyone, some days are different. Anyway, getting the time frames really do matter, and this is why I kind of point out that, here we go, a lot of meme chasing, right? These making money on companies that make no money. You know them. Rivian, biggest IPO just launched. Hold on, let me get this out of the way. All right, sorry about that. So Rivian recently, RIVN, just launched 144 billion in market cap. It has 0 in revenue, zilch. So they opened, their IPO opened at 110 billion. We'll get there. Hello? I'm looking for this stuff. Where the heck is it? All right, I can't even tell you because it's disappeared on me. All right, so you know that they opened and... Sorry, I'm having a little bit of a time zone, a chart issue. I'm going to go get my other one because I don't like that. Yeah, that's so much better. Thank you. This is my usual screen. I was trying to use something else. All right, so you can see that Rivian opened. It was a very big success, no question about it. It literally launched into the top 7 automakers by market cap. You got Tesla at $1 trillion, Toyota at about 300 billion, Rivian right there at its top at about 150 billion, half the size of Toyota. Think of that, no revenue. So this is a parabola that obviously is having a little bit of a reset after its extremely excited IPO. You can see Lucid also, and we're going to go over that one in more detail, and of course Tesla. This was actually recommended to clients, so I want to kind of show this trade in more detail. But this is another example of a pulling forward the future excitement and growth of an EV player. Lots and lots of momentum chasing that drove initially this type of parabolic behavior back in January when SPACs were hot. And then SPACs they had too many come in. The supply of issuance was just overwhelming and they fell by their own weight. Okay, Lucid and others and lockups and, QS and, I could go on and on. You can see what happened in January. Okay, boom. So Lucid has, again, nothing, 0. It is literally larger in market cap than Ford. Rivian's larger than Ford and GM. But the point is, larger than Ford, but has produced no cars. Ford, 4.3 million cars produced last year. So we're in a euphoric, parabolic trading environment. It's awesome for day traders. It's awesome even for swing traders. So this was an example where I literally said, right here, you can't even see it, but I posted in Slack and live trading room and the whole thing that this looked really good for a move higher, and it kept going. And even the pullbacks were bought. A higher high, came back down to the channel support. Then it blew right through it, 2-bar reversal, came back inside, and now it's obviously in some distribution, but well, it should be. It's a parabolic move that will trap longs. It will reset. I'm impressed that we have so many awesome opportunities, honestly. And then when you see something like this was something else I had suggested a few weeks ago with Lucid because of this shape. This is a parabola, right? That's a parabola. That's a parabola. That's a parabola. These are rolling parabolas. So this is another one. And I had suggested this because it was breaking out beautifully. It literally suggested on this day because it has Bollinger Band squeeze. It has a history of parabolas. It was a trend line break. Can you see this right here? All right, so then it was breaking the trend line. It broke out. It pulled back shallow fashion to the 8-day. Right now that's looking really good. Breakout higher, pull back to the 8-day. Breakout higher, pull back, didn't even tag the 8-day. Breakout higher. Now we got a little bit more of a red candle because we saw Rivian, right? This was pre-market. It was already down 7%. Ended up, or is currently down 15%. Lucid, still in trend. I mean, look at the, it's still doing fine, except it's getting a little extended. This will be, in my opinion, technically very, very easy to trade one way or the other, just like Tesla was, but know what you own and know your time frame. So Tesla was one of those where I'm a little bit more of an option trader on this. Not a little bit more. I watch the options much, much more closely, but I also watch the shape of this parabola. So this got extended. This is the 10-week, by the way, and I'm crazy for the 10-week. Above the 10-week is bullish, below is bearish. So this was when it was included. This parabola was basically included into the S&P last year, and it had massive gamma option flow. That was the tell that this was going higher and higher and higher. All right, Musk is a master manipulator, but the point is then it went into distribution and it came back down. This is obviously distribution, and then it started to move higher, and you can see this 10-week now is now serving as support. Then it's getting extremely elevated. So I actually was able to do a fib level on this puppy, believe it or not, from July, and said be careful at 1228, which is a price target that I gave once it started to look parabolic. Once it hits 1228, I believe it's going to come on back. And where does it come back to typically? The mean, which is the 10-week. So it hasn't quite tagged that yet. It did a big 20% drop, quote unquote bear market, and now it's bouncing again. But I still think this is a short the rip opportunity. So we can have intraday moves, and just to kind of remind, this is an hour chart. That's how I like to chase. This is a day. That's how I like to swing trade. And this is a weekly time frame. This is how I like to trend trade. So when they get too extended, I'm like, caution. We gotta tighten this up, because this is where I think we're going to have rejection or a pause. Does that make sense? All right, so I'm using, this is TC2000. It's a charting platform. And I can do lots of my custom codes and scans and that kind of stuff. So that's basically what this does. I don't trade from it. I use trading software, IB and Thinkorswim and Schwab, but that's actually a charting software. So this is what I wanted to kind of make a point of. Time frames matter, okay? And making money on companies that make no money. AMC is not worth $40, but they're burning money. They're literally lighting it on fire. Peloton was a parabola that has since come back to earth. They're also burning cash flow. So this is a really good representation from a macro standpoint to look at the micro when this market, I'm talking about the stock market, starts to turn and go lower. Right now we're still grinding higher, but the point is companies that make no money, lots of the Russell 3000 growth stocks with negative earnings, So think no product, think, no cars. This is really example. What happens to parabolas with no revenues, no products, no anything? They turn into this. They might have, even SPAC, which is the ETF for a lot of these EV plays, had a fabulous run right up into that hot sun in January and has since come all the way back down. That's a parabola. It's trying. It's not really going to get very far. So this is now just chopping about. But for me, we are in a parabola, whether it be the chases for car, Tesla, Lucid, Rivian, Fisker, other SPACs that are absolutely forward projections of products and revenues and growth and changing the world. We've just pulled it really forward. Just be careful. This happened in 2000, right? And we have exceeded that. So when the market does turn down, the ones that are going to be taken out and shot are the ones with no products, no revenue, no moat, that kind of thing. So just kind of keep that in mind. And I go back to the paper over things, right, which is this. So remember I had mentioned, not paper over things, things over paper. Basically, I had written about this in July of 2020. Higher yields, lower bonds, gold I thought was going to be a short back in August. Okay, I basically navigate all that core stuff for retail and institutional clients, right? All the commodities, the cryptos, that kind of thing. But this was basically my theme of paper to things. So what does that look like from a charting standpoint? This is from the 1990s all the way to today. This is a parabola. Can you see that? This is a parabola. This is big tech versus commodities. Basically, SPX is very heavily weighted big tech, right? Google, Microsoft, Amazon, Apple, Tesla. Now, you've got commodities picking up speed in the past year, and this parabola started to retrace. It's slow, but it's absolutely a parabola that's retreating. So this is that's paper over things. Now this is things over paper. Do you hopefully follow that? So this has been a theme of mine because I really think it doesn't mean that SPY is going to go down. And in fact, I wrote that back in July of 2020. I went, okay, the upside catalyst for equity markets advance. We've had it, haven't we? I mean, we're up like what, 24% this year alone? Oil shock yet to come. Yes, we have. We've had it, and I don't think it's done. US dollar makes the weather. How are we doing on the dollar? Yup. Pushing higher. We're not COVID high, but we're definitely pushing higher. Rate spike, we already had it. So the point is, things over paper is still a theme. We're in a parabola. We definitely had some things come back down, whether it be coal, shipping plays, nat gas. But the point is, these have been trend plays for over a year. So now they're either in distribution or they have retraced. Some of the moves were way fast, like lumber, but it's not done. They're basing. So this is kind of what I wanted to show, and then some more of my kind of warnings. Warnings meaning here. All right, so we talked about this idea of being in a parabola. I would argue that this particular ETF, which is on a weekly, it's XRT, is a parabola. And a parabola is representing not just the meme stonks, but also retail and other consumer discretionary that has basically screamed higher. And this is also Amazon, right? But this is a parabola. So there are some plays within our own, boring sector analysis that are in very, very strong parabolas, much higher than the COVID highs, that bear watching. Let me just put it that way. And then hold on, where am I? Yeah, that works. All right, and then this is NYSE, which is the New York Stock Exchange Composite, also on a weekly. And I show that because this really has to do with the Russell and small caps. We've recently broken out. It's a very, very bullish chart when you look at small caps. As long as this holds, this move, and you can see when the market gets too extended from the mean, okay, so the mean, just look at this 50, gets extended, it comes back in. That was January 2018. And I was timing this for clients, and within 2 weeks, this collapsed. Actually doubled my account in that period of time because I was very confident that that was going to come back down. Then we grind higher, and then we had rate of change in the 10-year triggered 3.2%, triggering emerging market panic, and this market collapsed 20%. That was also really well timed. You can see the 50 week, we went back up, right? This gyration, we got extended, and now we have this divergence with the COVID crash. Also timed that with precision. That was phenomenal. My indicators were completely divergent. We went all the way back down. I can't show you in this one, but I will show you in the bigger one. It's about 2200 before the V-shape and intervention by the Fed, and we're talking $21 trillion later. But the point is, this particular move right here is just very, very parabolic. So at some point, this will come into a period of correction. It hasn't, but we're in a parabola. Some other parabolas that might look familiar. This is on a monthly, but you get the idea. So here's 2009. This is Apple. Here's Amazon. From 2014, pretty quiet. Started to move higher. Pretty bullish. You get the idea. This is Litecoin. This is a parabola. It's not going to be the same as the Squid Game. Okay? Some parabolas end up going to zero. So in that particular case, for those who want to make fun of parabolas, that's fine too. This was another perfect example of a trapped, can you see that okay? Okay, perfect example, trapped longs. Last in, first out, all out, triggered volatility equals liquidation risk. Boom, the Squid Game crypto coin. It went from 720 million coins valued at over $2 trillion at 5:35 a.m. Okay? Right there. It went under 1 million right here. That's it. At 5, I think it was 39 a.m. So this is the other problem, right? You never know, in this particular case, what you own. So you don't have to trade really large. I mean, if you're really chasing that kind of thing, just be careful, because that literally happened. That went from 2 trillion and a few minutes later to 1 million. So better parabolas. There are definitely better parabolas to trade. The oil trade right now. This is on a monthly. Big picture. I gotta always throw in some macro. I'll throw in the, you know, the laughing stocks like the Squid Game crypto. There's always going to be those because there are, what, 15,000 coins now, and some of them are going to blow up. Then there's the, you know, the market in Bitcoin, Ethereum, Solana, Litecoin, and the rest, which for the most part look like they're going through rolling parabolas. So here's an example with crude oil. We're really in a parabola right now. This was 2008. What's interesting about the oil market, and I put this on a monthly just so I could fit it all in here, but the point is, we actually had in 2008, right about here, we had a major supply constraint occurring in the drilling market. So they could not get enough tubing. None existed to buy anywhere. So it was actually supply driven, not demand, but supply driven stress that caused a short squeeze in oil. And it was a financial crisis. So basically, this short squeeze caused inflation of oil price. And it was basically our financial crisis, the great financial crisis, which caused the deflation of oil price. All right, now here again, we had a negative print in oil, so it was extremely oversold. We've moved all the way back up and above the mean. Here we are right here. And I even told clients back in March when we were over here, above 65, and this thing could double. In the same way I wrote for clients in Lucid, literally, when it got to, hold on, let me just grab this. I want to grab this chart that I had for clients. So here, I don't know if you can see this all right. So I had recommended Lucid, and I said if it gets above 32.57, could get explosive. And you know what happened, right? So that puppy doubled from entry, and it's, by the way, not doing too bad. So that was literally what I had posted for clients. Could get explosive above, and it did. So parabolas do have a kind of a personality. They are, for the most part, predictable. I know that sounds hard to believe, but seriously, they are. So most crash back to where they started, like this originally, the Lucid, and then it based for a while. It's not going out of business. Some of them are slow motion crashes. Let me just show you that as well. Slow motion crashes would be my Chinese ADRs. So take a look at FXI. This is very messy, but I'm going to just humor me, okay? FXI is China, and it gapped down right here from February, and it has been retreating. Now it's basing a little bit, but still weak. K-Web, same thing. Look at this. That's a parabola. Gap down, and it has been in a protracted downtrend. It's trying to base. I don't have a lot of hope for it. And even the structure is just really nice, right? I mean, it's literally come all the way back down. More so, it actually gapped again. So some parabolas can be slow motion crashes like FXI and K-Web. Some can be dramatic trapped longs like, CAR, C-A-R. Others can be rolling parabolas like Bitcoin and Ethereum, or our COVID infection rate, unfortunately. It doesn't mean that this is not tradable by any stretch. It just means know what you are trading, and if you're in it for the trend, or, so you have it as a trend trade, or you're doing it just to make money and capture, a beautiful momentum move, or if you have some other means, basically macro or micro, just know what you own. So this was a little bit of what I wanted to show in regards to parabolas, and I'm looking for something else that dollar. That was it. Remember inflation of the 70s? Got extremely hot and heavy, 16%. And look what then became a de facto tightening, a parabolic dollar starting in the 80s. So we're not there at all. So luckily, we're not there. We have obviously based above this monthly trend, this weekly trend line. This is obviously multi-decade long. Look at the US dollar, and I mention that because it really does matter, right? A headwind of the US dollar going higher is de facto tightening, and it will put pressure on our market. Higher rates will as well. But the Fed has a little bit more control over that, right? So we hope, we think. Anyway, point is, we get over 100, this could absolutely go parabolic. We're not there yet. We're 95, 96, I can see 99, but we have, you know, miles to go. I still look at that one chart, and let me just grab one because I think it kind of will emphasize why I'm kind of big on this theme. You can look at that for a second while I grab it. It is here. It is here. And I like this chart, so I want to show it. Two charts I want to show you. Don't go anywhere. Let's see if I can get this out here. There it is. I'm just going to scroll to the right date. I'm getting there. There it is. All right, so this is what I was talking about on the NYSE, okay? So this is the NYSE. I showed you on a daily. This is a weekly, okay? So this is a weekly going all the way back decades, right? And we definitely had a really nice big top form and roll over in 2000. Didn't retrace to the bottom. We had a really dramatic great financial crisis. It really did retrace to the bottom. This has been in fits and starts moving higher since 2009. The difference is the rate of ascent in this moving average, in this price action. So down and up, typically parabolas retreat at least down back to their mean. Their mean is like down here. So even though the NYSE is about 17,000, the mean is more around 14,000. That's a big correction if we were to get it. And under the surface, we've already been kind of lackluster in MACD and rolling over. That's a big outlier. So we're in a parabola. Kathy, I didn't catch your question about what symbol of this ETF. Which ETF? And when it's okay, so this to me is tortoise and the hare kind of thing. I like this. This is not the ETF I'm recommending. This is the chart pattern I'm recommending. So to me, this is again weekly. Here's the 10-week in gray. Gets a little extended, comes back in. Gets a little extended, comes back in. Little extended, but very, very nice. Almost, this is your 45-degree angle you want. Now it's a little extended, probably comes back in. Make sense? Versus everything else I've been showing you. That's the difference between a trend that is really consistently just grinding higher and a parabola that picks up all kinds of drama, gets extended, and then needs to come crashing back down. Now, this is all kinds of support because it's Tesla, but the point is they don't all look like this. There's just nothing, I believe, that is going to keep CAR up at 275 or AMC up at 42 or the like. So these are trapped longs in a nutshell. And then as far as gold, yeah, it's unfortunately not ready. If we get some, major volatility, gold is definitely just not right now easy. Above 174 for me is definitely bullish, but it has to stay there. And right now it's intonating either way. So I am very much, I'll show you. This is my gold miner index. Hold on, let me just get that. Yeah, so I write about gold a lot, right? So you can see the dollar's moving higher. This is gold inverse. But here's the thing. This particular gold miner percent index that I use, which helped me time that gold short back in August of 2020, it bounced beautifully, but it's not doing anything else. So it has a lot of work to do. It's starting to come out of a squeeze. I don't see it, moving parabolic right now. I just see it coming out of a squeeze. It still has to prove itself. These were parabolas in gold. This was COVID low. Oh my gosh, remember the emergency rate cut back in March 3rd and March 16th or 15th? That caused a parabola in gold. But this is not that. So this is what I do. I try to time these sector rotations and trends, special events, situations on multiple time frames, right? Hour, week, day, month, whatever you want to look for. But I'm looking for divergences in this parabola that we're in for when it's going to break. And right now I don't have any indicators that say, hold on to your hats. I have one chart that I have shown with clients repeatedly, and I will share it here as well. Let me just get it up because it fascinated me. We got there so quickly. All right, so this is, hold on. Actually, I can show this even better live, but this yeah, let me do that. And then I know there we go. All right, so there we go. This is a little bit confusing, but what I had done was the same thing when we had the November Pfizer vaccine, right? We gapped up and then we just stayed in trend. We came down to the 10-week. We came down to the 10-week, but we always closed above the 10-week. This is the trend. It's your friend, period. That's not parabolic. That's just grinding higher. That's just liquidity at work. We broke once. I had an audible go short to clients on September 8th. It actually broke that week. We went down, we held, and then we started moving higher, and then I gave my levels, 44.65, 46.20, and I thought this would be the year end for me. 46.63 basically, 46.62. We've been here for a few weeks. This 5,000, now you hear it everywhere. But the point is, that is a fib level, pretty straightforward. I don't know how quickly we're gonna get there, but the point is, we haven't shown any parabolic move yet in SPY on that time frame, but I can show you with Apple and Google and the rest we have. No, Google and Microsoft, excuse me, Google and Microsoft, we have Tesla's coming back in. Oil is obviously very bid, but you can do this, really across the board. This is decentralized finance. This is how much money, deposits that have come into DeFi, it's parabolic. This is shipping container rates. You can see it's parabolic. I want you to see parabolas everywhere.
Hey, Samantha. Sorry, we're almost out of time.
I'm done.
Gotta cut
All right,
you
so
off here.
anyway, anyone who's interested in finding out more, you can find me at LaDucTrading.com. We do have a Big Ideas membership, which is for the trend traders. They're not interested in the live trading room, and all the details, all the calls day by day. But Fishing Club is for the live trading room and my calls day by day. And if you are interested in the Discord, LaDuc Trading Discord, have at it. This is where you can find me. Right here, which is LaDucTrading.com. I have a YouTube channel, a Discord, and micro and macro for Twitter. So come look me up, and if you have any questions, let me know. And thank you again, Anka and David, for this invite. I hope it gave some perspective.